Hey Old Sport, this is JC at FX Insights with CIS Trading. I wanted to point out a couple of things this morning off the open after the first 30 minutes. It's 10 a.m. Friday, and I just wanted to point out a couple of things that are kind of key to look at coming in the future as far as the major markets are concerned. So when we look at the Dow this morning, you can see we have sort of a huge negative push in the Dow components. Remember, the Dow components are the most capitalized stocks with the highest cash balance on their books. So most capitalized, highest cash balance. They're also predominantly the more successful companies in the United States of America. So when you look at the Dow components, you're looking at capital, right? Profitability, and cash on hand. Capital, profitability, cash on hand. When we switch over and look at the S&P 500, so looking at the US 500, when you look at the US 500, you see something different this morning. You see a push up. There's a reason for that. When you look at the S&P 500, the S&P 500 is more representative of companies that are not only the largest companies that are part of the Dow components, but the remaining companies who may not be quite the size in capital, so they have less capital. Most of them, less profitability, right? And combined with that, most of those companies have less cash on hand at liquidity. All right, so they have less cash on hand. So less profitability, less capital, less cash in the S&P 500. What you do have in the S&P 500 in the market today is 70% of the equity is securely financed through a loan type of instrument, not through stock purchase. So when you look at the S&P 500 showing sort of a push up compared to the US 500 showing sort of a push down, or the US 30 showing a push down, so the S&P is moving up with a push, the Dow's moving down. Part of that is because something is happening to the capital underneath the economy where the cost of money is increasing. And as the cost of money increases, that increases the value of debt, which is what is financing 70% of the S&P 500, not cash liquidity like in the Dow. So in the Dow, that cash liquidity sees pressure because the monetary constraints put pressure on free capital and raise the cost of debt. So the S&P pushes higher and the Dow pushes lower. And a lot of that is also a grab at capital as far as a market behavior in the market. What we're looking at here is the pound yen. For a while now, the pound yen has most represented the yield curve in the way of rising cost, rising yield, falling yield, or falling costs. And the falling cost would raise the value of the dollar typically. As the cost goes down, that should go to yield directly to the money, typically through the yield curve. So pound yen, when you're looking at the pound yen, it's telling you if the pound yen is going higher, typically that's going to be higher costs. Debt increases in value because it's going to cost more, right? If it's going down, that produces more of a yield. So when you look at the pound yen, it's sort of like trading the yield curve in a way. You're trading with the ratio between the yield and the cost, which is represented in capital performance, the lower part of the chart, sort of in the yield spread, whether or not that yield spread is increasing or decreasing. All right. So when we go down to look at the 1 minute, for example, on the pound yen, which has been kind of strong through the night, when you look at the 1 minute, the yield spread is right around 1 1/4, and that holds through the bond. So what we're going to probably see, most likely, is that yield spread narrow and go down. So when you're looking at the Dow components and the S&P components, the S&P components have a debt value that goes up with the cost of capital and up sort of on inflation, where the Dow components, when money is damaged, their cash liquidity that's on hand and their higher capitalization and their profitability with inflation can see declines where the S&P is going up. So I just wanted to point that out this morning. It was something different that happened all at once in the market and coincided with an opportunity to just point out how that cost of capital in capital performance really works from market to market. Once again, I'm JC with FX Insights at CIS Trading. Have a good day and a good weekend, Old Sport.